topics and opinions expressed in the following show are solely those of the host and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome and great Monday morning, September 15th. You know, things that happen and you have to do on today is kind of one of these really bad deadline days. And, you know, today we're going to talk about deadlines, what you have coming up, all the rest of the year for 2025's taxes and the things that you've got to go through and do. Speaking of taxes and kind of good news, I got a new tax deduction. We had a birth out on the ranch. It's another mouth to feed. It's another calf. So in a couple of months, she'll start eating more feed. But I guess that gives me another tax deduction, bigger food bill to go out there, and she's a healthy, full-blooded Angus cow. So we're really excited. It was kind of good news and kind of a surprise. We did AI. No, not artificial intelligence and stuff like that. It's artificial insemination. And, you know, we got to pick the bull that we got to use. So it was really kind of cool. It was unexpected because when we did the pregnancy tests way back in January, she did not show up as if she was pregnant, but then she showed up later that she was pregnant after we had a bull on the property for about 3 months. And we have 2 others that are due. One looks like it might be coming up quicker than we expected. And another one probably be closer to that November, December date we were expecting when the bull was there. So kind of a surprise. My wife predicted it, you know, just the night before. She's like, man, she looks like she's going to pop. And lo and behold, that calf was on the ground in the morning when I got up. So it's really good. It's really nice when you don't have to do anything for your cows and they have the births naturally without any problems. She's been a great mother, so that's been good. Hey, you know, so we get tax deductions, you know, right there, you know, dealing with the ranch. But, you know, so when you're in business, when you're self-employed, maybe you're doing consulting, maybe you do some side work. Well, today is another deadline for you. If you have to make estimated tax payments, you need to get those in today. Now, you can mail a check still. They're supposedly trying to change that to where they're not going to take checks after September 30th of this year. However, what I've noted is that they have rescinded that, and they'll continue to take checks, you know, later after the 30th. So they're going to want going forward at some point to be where every tax refund has to be done by direct deposit. Every tax payment has to be done either direct deposit or direct debit, or you go online to irs.gov and make the payment, you know, through there. So you still have some options to go through and do besides mailing a check. I see more and more people trying to get away from checks and everything, but it's still part of business and everything. So you've got that deadline. So if you've got to make estimated tax payments, get them in today. If you're going to mail a check, have it postmarked today. Otherwise, go on the IRS website and you can go to irs.gov and go to payments, and then go in there and set up an account and make the payment as well. It's not a bad thing to have an account on the IRS website because you can go in and check all your information over there on the IRS website as well. You can also track your refunds. We also try to tell people that you should get an identity PIN. Protect yourself. Nobody else can file unless they have that PIN number. So it kind of does protect your account as well. Today is also the deadline to file your S Corp or your partnership returns that were extended back on March 17th. So you would need to make sure that if you have an S Corp or you have a partnership, that you're getting those returns filed today. Now, if you don't file them today, man, you're going to be hit with penalties. And penalties will date back to the original filing date. And then you're going to have penalty after penalty until they run out of the penalties to hit you with, or until you file. So, make sure you get that return filed. If it's not 100% absolutely correct, you can always file an amended return out there. So I suggest you get it filed. Now, don't commit fraud or anything. Don't be fraudulent in the way you file a return either. Hopefully you're very close to having the right numbers for your company, but at least get those things, filed, get that in. If you have to, maybe you didn't break some things down the way you should, or you're waiting on interest expense or something else to come through because, you couldn't track it. You didn't do bookkeeping all year long. Get them filed and get them in. Maybe you had a CPA or somebody doing bookkeeping and didn't do bookkeeping right, and you just need to get a return filed, get it corrected, and then amend the return to make it right. Do it in the next 30 days from there. Here at Trucker Tax Tools, Taxation Solutions Tax Relief, we've run across a couple of trucking businesses who had very terrible bookkeeping through one of the well-known trucker bookkeeping services that are out there. And we've had to go in and fix that and get it corrected. Now it's taken us a little bit more time than we expected because the bookkeeping that was done for 2024 was just terrible. But we managed to get those done and get them filed here timely. If you're coming to us and needing 24 or 25 bookkeeping done, don't expect it to be done overnight. But as soon as you can get the information to us, we'll be able to get things moving and get it done correctly in short order. Now, there's more deadlines coming up. Everybody knows, okay, if you've did an extension back in April for your personal return, you have a deadline of October 15th. So you've got to file your 1040 by October 15th. So that's your next deadline. Now, if you had money due and it's more than $900, the IRS is going to hit you with penalties and interest. They do give you that flexibility of that $900 there. So, you want to make sure that you've paid everything, hopefully back in April when you filed the extension, or got you within that $900 limit out there. Those are some of the things that you really want to make sure that you have done. Now, also October 15th, you've got to file your corporate return if you have it in an extension. So the 1120 is due. Remember, the 1120S, the S Corp, is due today, as well as partnership. But corporations file an 1120, due October 15th. Your trusts, if you file a 1041 for your trust, those were extended, and those would be due October 15th as well. So you want to keep those things in mind. Hey, we had a question about estimated tax payments. How do I know and how much do I make for my estimated tax payment for 2025? So first, what we're going to do is calculate your estimates off of your 2024's tax return. So if you filed your 2024 tax return, or your tax return is already been filed at some point, or almost or maybe a good draft, you should be able to figure out what your estimated tax payments are from there, because the IRS is going to want at least 100% of the 2024 taxes paid in for 2025. And then depending on how much you're making and what your tax is, you may have to add to that to get it up to 120%. But that's something that you've got to look at and do. Now, you can also make your estimates equal to what will be the actual tax that's going to be due to for 2025. So if your business is down, this is something you actually want to go through and redo your estimates so that they're on par with what you're actually making and you're not overpaying. So the goal is to pay the minimum amount in, set aside the rest, and pay the rest April 15th, so that you're making money off the money that you need to pay in taxes next year, but don't have to pay in your estimates currently. And then if your business is down, you don't want to overpay, because the goal is not the refund. The goal is to hold on as much money as possible for yourself, and you earn the interest in investments as we go from there. Hey, we're going to take a short break. When we come back, we're going to continue talking about future deadlines in 2025 or for tax year 2025 right after this.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We're talking about deadlines and things you need to know when you're in business. Maybe you're self-employed, and even on the personal side. So, remember, you have about 30 days to file your 1040s if you're on extension. So get them in, get them filed. If you haven't worked with somebody yet, get out there and reach out to them, because there's a lot of tax preparers that stay booked solidly all year long. So if you need help, reach out. Trucker Tax Tools, Taxation Solutions, 888-930-1016, 888-930-1016 is Taxation Solutions Tax Relief. And we can help you as well solve your IRS problems, get your taxes done. Maybe back taxes might be a problem. Maybe you forgot, maybe you overlooked it. Maybe you just didn't want to do it. No problem. We can help you. We can get it done. Now, if you're in business and you're doing payroll, you're going to have a quarterly filing coming due. Those are due October 31st, and that's for the third quarter, July through September. Now, you got to make your payroll tax payments. Payroll tax payments are going to be based on what the IRS gave you the letter at the beginning of the year saying, hey, this is your payroll filing requirements and when to pay your payroll taxes. Some people are on a monthly basis, some are biweekly, some are with each payroll. I prefer to set up every company that we do payroll for to pay their taxes with each and every single payroll. That way you're not hit on the 15th of the next month, even if you were a monthly filer, to having to pay a large portion of payroll taxes that maybe you didn't save for, maybe you weren't prepared for, maybe you didn't think about, or maybe you got hit with other expenses, and it's easier to avoid paying payroll taxes and pay those other expenses and then deal with it later. But it becomes very costly when you do that. One of our new clients that we just got in, we found out that they're 3-4 months behind in paying their payroll taxes, and the penalties on that is going to be astronomical. They also missed a couple of filings, so the IRS is now first sending out the first letter with estimated amount that was due and hitting them with penalties for that. So you want to get in, make sure you make your quarterly filing for payroll 941 return, and get that in before October 31st. Of course, you got to wait until the end of the quarter, so just remember your deadlines. Even if you're using a payroll service, verify the forms were filed and accepted. Because we've seen there have been some payroll services out there that forget or miss the filing, or you've got to approve the filing and you didn't know or you didn't think about it, and so you miss the deadline. So you don't want to miss the deadlines there as well. Now, speaking of payroll, you're going to have some annual tax form filing that's going to be due. So your Form W-2, the wage and tax statements for all your employees, you have a filing deadline of January 31st. And that's also the same deadline to file the W-2 copy A with the Social Security Administration. And if you do withholdings for the state, your state has a filing requirement as well for those W-2s. So you want to make sure you get all those filings done. Again, another client came to us. We've now found out they didn't file the W-2s with the state. They only filed them with Social Security. And so, Social Security Administration was complete, but the state wasn't complete. So we've got to take care of that problem and make sure that those things get filed. Also, Form 1099 NEC, non-employee compensation. So payments over 600, now they're moving with one big beautiful bill. You'll have till the end of January to file that. So those requirements are changing, but you still got to file the 1099 NEC by the end of January. So there are changes to this, but you want to make sure you get your forms filed. Also, Form 940, that's your annual federal unemployment tax return. Deadline to file the 940 is January 31st. However, if you deposited all the FUTA tax and on time, then the deadline's extended to February 10th, somewhere around there, give or take holidays or Sundays and weekends. But why wait? If you're filing your W-2s, you're filing your 941s, that'll be due by the end of January as well. Get the 940 filed. Get your payroll forms done and out of the way so that you don't have any deadlines that are missed. All right, question. Alice, yes. What's the difference between a monthly depositor for payroll taxes or a semi-weekly depositor for payroll taxes? Well, a monthly depositor, if your tax liability was under $50,000, then during the look back period, so they're going to send you this notice in January, they're going to look back to the previous year. Then if you're under $50,000 for the whole year, then your payroll taxes are due the month following on the 15th. So whatever was paid, let's say in August, would be due today. If you're a semi-weekly depositor, it means your tax liability was over $50,000. Then you would get on the semi-weekly. So for payments made on Wednesday, Thursday, or Friday, you must deposit the tax by the following Wednesday. If your payroll was paid on a Saturday, Sunday, Monday, or Tuesday, which I'm not sure how Saturday and Sunday applies unless you're issuing checks. Most people do direct deposit. Then they're due by the following Friday. And then the one last rule that they have is $100,000 next day rule. So if you accumulate a tax liability of $100,000 or more on any day, you must deposit the taxes by the next business day, regardless of your standard deposit schedule. So like, maybe you're doing huge bonuses and now you have a huge amount of payroll taxes need to be paid into the IRS. You would have to deposit that the next day. So isn't that really fun? I recommend all the time, if you're doing payroll, engage a payroll service. It's worth it. Now, some of them charge you a little bit more than we do, or quite a bit more than we do. But you need to have a payroll service working for you. Now, our payroll service, that we offer, you've got to be a bookkeeping client of ours. Otherwise, we are not going to do payroll services for you. We want to encompass that into everything that we're doing so that you have one-stop shop, one place to go, and, we'll help you through, your payroll. But if you're not using us, get a payroll service. It's cheaper to have a payroll service engaged than to ask us to come back and solve your payroll tax problem after the fact. Payroll tax problems become very costly to you and your business. The penalties that are associated with messing up payroll taxes is astronomical, and create not just a problem for the business, but a problem for you as an individual. In our next segment, we're going to talk a little bit about those payroll tax problems, but we're going to continue talking about deadlines. This year, you also, as a personal side, December 31st, 2025, you have deadlines still coming up. A deadline to make required minimum distributions. So if you're 73 or older, you must take your RMDs from the retirement accounts by the end of the year. Now, hey, you could use qualified charitable contributions out of your retirement account to avoid some of the taxes and avoid it to be accounted towards income. Make that contribution directly to your church out of your retirement account, and that'll qualify as part of your RMD. Take a look at that. You got to talk to your tax guy. See what works best for you. Charitable donations, you got to make those by the end of the year. You can charge them on a credit card. You can pay cash, send a check, but make those before the end of the year. If you've got a retirement account in your workplace, December 31st is the last day to make contributions to an employer-sponsored retirement plan like a 401k. And then tax loss harvesting. So if you can sell assets to get capital gains, you can sell assets and realize capital losses to offset your tax liability for 2025 as well. So keep those things in mind. Hey, we're going to take a short break. We have one last deadline that we're going to discuss right after this break and talk about payroll taxes and the penalties that you can incur and what happens when you mess up. We'll be right back after this.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing. But that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
I have to laugh. I had a great question come in. In the first part of this show, we talked about our new tax deduction. No, my wife and I did not have a baby. We had a calf. And so somebody was asking, how is this a tax deduction? Well, when you're in ranching and farming new animals on the property, no, you don't get a Social Security number for them. No, you don't get to take the child tax credit for them. We all wish that could happen. I've had people go, hey, my dog count, things like that. If you can get a Social Security number, then I'm sure I can find a way to deduct it. Yeah, our calf's going to get an ear tag and it's going to get a number, but it isn't a Social Security number. But it is going to contribute to my feed bill as I do feed supplemental feed to my cows. So it's something that becomes a deductible expense for our ranch because we do sell cows or we do sell meat. We do sell eggs and we do raise our own chickens and our own pigs. So, as we're going through and selling animals, the feed cost is deductible. Supply cost is deductible. Vaccines and everything else that we may use on the property for our animals, those things are all deductible. So yes, we consider that a new tax deduction. Actually, it should be considered to be an added expense, which is a deduction for us, but it's part of farming and ranching life that we get to enjoy. So we had that wonderful surprise this weekend. I'm looking forward to having a couple of more calves here over the next couple of months. So we know it's not calving season. We're kind of off from everybody, but it's a great time, for us in our business and stuff. One more tax deadline we need to talk about, and that's the January 15th estimated tax deadline. So your fourth and final estimated tax payment for 2025 is going to be due January 15th, 2026. And that payment covers income earned from September 1 through December 31st, 2025. Now, remember, these are usually based on your 2024 tax return. You may owe more money than this. You may owe less. You may decide, hey, I want to be more complicated, and I want to base each of my quarterly estimates off of actual income, which is good. Now, maybe you have a business that, hey, cycles up in the last quarter. So maybe you sell items that your income comes in because of gift giving and everything around Christmas time. And so, you may change the way your estimates are because your first quarter or second quarter estimates may need to be really low because you're going based on actual earned net income. And then maybe starting the third and then the fourth quarter, those two estimates would go way up. Or maybe you are very cyclical in business and that your business does a lot in January through March or even April, and your first two estimated tax payments would be higher and then the final two would be lower. That's a way of doing it as well. However, if your business is that way, I would actually tell you that you make an even estimated tax payment throughout the year so that you're not taking funds and giving them earlier than you have to, and you can earn the interest or investment income off of those funds as you pay it over a period of time. But if your income goes way up towards the end, then you want to keep your payments low and do it on actual and pay them in that final quarter out there. So that's one way of looking at doing that. But you've got to have good bookkeeping for your business. You got to be able to track what you have going through. And then you've got to be able to make sure that you're doing this right. Now, some of the ways we work with people that do estimated taxes, if they're running an S Corp, the owner of that business has got to be on payroll at a reasonable salary, but it didn't say when that reasonable salary has to be paid. So that reasonable salary could be a bonus towards the end of the year based on net income for the business or something. You can use some kind of model out there to determine what that is, but you could make all that payment go to federal withholding, which covers all the estimates that might be required. And it counts as if you've done it evenly all throughout the year. So you didn't have to pay a dime to the IRS, but you make that lump sum payment in December so that you're making money and keeping that money invested and working for you, but make that payment later on. So some of the things to consider and some of the ways to look at doing estimated tax payments to make your life a little bit easier and pay less upfront to the government. Now, this brings one of the topics that we have seen come up more and more over the last few weeks. We've had a number of companies calling us because they blew it. To be honest with you, they blew it. They missed payroll tax deadlines. They missed payroll tax deposits. They just downright missed it. And it becomes costly. I mean, the stiff penalties that the IRS puts on you, the accrued interest they add to it, the liens now that they place on your assets, and then potential personal liability for that business payroll tax debt. Now, what are the financial penalties? I mean, people think, oh, it's not really that bad. It is. So the failure deposit penalty, the IRS is going to impose a tiered penalties for late or insufficient payroll tax deposits. For the first 1 to 5 days that you're late, you get hit with 2% of the unpaid deposit. 6 to 15 days late, it becomes 5% of the unpaid deposit. More than 15 days, they're money hungry out there and people can't afford this as it is. If you're more than 15 days late, they hit you with 10% of the unpaid deposit. So let's just say you had $10,000 due, and all of a sudden they're going to hit you with 10%. That adds another $1,000 on top of the 5%, on top of the 2%. Crazy. And then more than 10 days after the IRS notice, it's 15% of the unpaid tax deposit. Man, this is why having a good payroll service and making sure your payroll taxes are paid is so important. Even if you've got to get a loan and pay exorbitant interest rate, let's say you can get a line of credit for 10 or 12%, that is sure cheaper than the penalties the IRS is hitting you with right there, because that doesn't even include the interest they're going to apply. Now you failed to file as well. You get a separate penalty of 5% of the unpaid tax each month or part of month a return is late, up to a maximum of 25%. So you're 5 months late, you get hit the full 25%. Now, add to that interest. So it isn't bad enough. You're more than 10 days late, more than 15 days. You're more than 15 days late. They've sent out a notice. You're another 15% on top of that because you didn't pay after the notice. Then you also got hit with the 25%. And now the IRS comes back and hits you as well with interest, compounding daily on any unpaid taxes and penalties from the original due date until the debt is paid in full. Now, original due date of the deposit, not from when the form was required to be filed. So if, say, you missed March's filing deadline, but you didn't pay the tax for January and February, so the interest starts from February on that deposit that should have been made. Then the interest starts in February, then the interest starts in March, and it just continues to roll on. Now, the interest rate is adjusted quarterly and is typically based on the federal short-term rate plus only 3%. Only 3% on top of the short-term rate. Then you haven't filed the state returns. Each state is going to impose their own set of penalties for late filings, late deposits, and these can vary widely from state to state, plus interest. They're getting you coming and going. Now, do you think that's bad enough? It gets worse. Oh, Mr. Fowler, how can it get worse? It does. It's the IRS. There's a personal liability side of this for business owners, for signers on the checking account, those that had authority to make a decision for the business. And it's called the Trust Fund Recovery Penalty, TFRP. The IRS can hold a reasonable, responsible person, and that can be anyone in the business who has authority to make payment decisions, and hold them personally liable for the employee portion of the withheld payroll taxes, considered to be the trust fund taxes. So that is the portion that you withhold out of your employee's check for federal withholding, Social Security, and Medicare, and anything else that is payable to the IRS, and you don't pay it in, you can be hit with this trust fund penalty, and it's equal to 100% of the unpaid trust fund portion of the taxes. And you are held personally liable. Now, this is owners, officers, or other responsible parties. So if you are a signer, manager on the checking account, you may have authority to make decisions of who gets paid and who doesn't. Even if you did not make that decision to not pay the payroll taxes, you can be held personally responsible and at risk if you're found liable for those unpaid trust fund taxes. And this personal liability is often non-dischargeable in bankruptcy. Now, we had a guy that came to us years ago that got held liable. He actually trusted the people he was working for that was going to have representation for him. And basically they threw him under the bus and said he was the one that had to make the decisions on whether or not payroll taxes were supposed to be paid. He got hit with the trust fund penalties, close to $1 million, trying to hold him liable. Hey, what happens when that happens? How do you recover from that? And how can that make a huge difference in what you're doing in working for somebody in that business? And how can they hold you responsible? Now, we're going to talk about the results of what happened for this guy here shortly after this quick break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
You know, sometimes you're having fun and talking and trying to get points across and help people realize the damage they create by missing, certain deadlines like payroll tax deadlines or payroll tax deposits. You can throw your producers off. Hey, what can we say? Life is short. Let's have some fun. In dealing with somebody that has missed payroll tax deadlines in companies and helping them, recover and save, it really damages business. It really hurts for the people working in the business that may have been charged with having personal responsibility for something that happened in their business. And one of the gentlemen that we were dealing with happened to be a manager. One was a manager, and actually this is two different people really. One was a manager of a bar who signed on a petty cash account and then got held liable for over $150,000 of payroll taxes. But all he did was manage the bar, turned in timesheets, and never had any financial responsibility for the company, except for paying out of the mixed beverage account for the liquor that was delivered, and he didn't order the liquor. All he was authorized to do was write the checks to pay for the liquor that came in. And the IRS held him responsible. We were able to prove that he had no knowledge of any other part of the operations of the business and could not be held liable because he only signed on this account, and there was never ever payroll that went through that account. So he only used that account and had no knowledge of what funds were actually in the account either, because he never saw financial reports for that part of the business. We were able to get him off. The second gentleman, he was close to $1 million, and we had to really work at this because the IRS was turning us down every step of the way for every appeal we had. He had come to us about 4 years after he was charged with trust fund penalties because they were coming after him. But he did not have knowledge of that he was even assessed the trust fund penalties, because the company he was working for changed everything to their address, and then the company went under, and the company offered him representation, and the representation they gave was he was the person that was responsible making decisions for the payroll taxes. So he got hit along with the owners. Now then, both owners passed away in the meantime. And when the IRS was coming back, the IRS was very insistent he was the only one that could do it. Well, he had no assets available to pay the IRS anything. So we had to choose other routes to go around the IRS to get these payroll taxes lifted off of him so that he could finish living his life. And he was going to retire, so he did not have the income or the wherewithal to pay this $1 million in trust fund penalties. So, keep those things in mind. Now, other things that can come of not paying your payroll taxes, of course, liens and levies. IRS is going to put liens on the business. If the trust fund penalty has been levied against you, they're going to lien against your personal assets. They're going to levy if you're not on a payment plan with them or haven't worked something out. The IRS will come after the bank accounts and property of the business. And if you have the trust fund penalties against you, of your personal assets as well. And if you don't believe me, go to the IRS website. You can go to U.S. Department of Treasury and go auctions and see the items and things that are auctioned off on their website, including property, businesses, business licenses. They're all there as well. In extreme cases of willful and intentional tax evasion, business owners can face criminal prosecution, which then can result in large fines and imprisonment. So if you're scared, be scared, especially if you're doing this, intentionally. You could increase your audit risks. Consistently missing payroll tax deadlines can draw unwanted attention from the IRS and then increase your likelihood of being audited. And then it has damage to your reputation and operational damage. It affects your cash flow. It affects your credit rating. It can harm your reputation with your employees, vendors, and clients because, hey, if the IRS is coming after money, the IRS may be levying where your money's coming from as well, so it may affect your clients when they get that notice. So you want to make sure that you're filing and paying your payroll taxes. If you've missed them, get them in, file them as soon as possible. If you're in trouble with the IRS and you want to be not held personally liable, because they can go back through up to 3 years and hit you with trust fund penalties, go back and pay the trust fund portion of the tax. Get that paid so you can eliminate the civil liability side for you personally. And if you're a first-time offender, you can probably get some penalty abatement for reasonable cause for the delay, fire, natural disaster, serious illness. You're going to have proof, but you can do that. And above all, seek professional tax help to navigate the process, correct errors, communicate with the IRS, and minimize the consequences. And that's what we do here at Taxation Solutions Tax Relief. If you got IRS problems, whether it's personal or whether it's business, call us 888-930-1016. Again, 888-930-1016. Get our expertise. Let us help you through your tax problem with the IRS and stop them from coming after you. Hopefully we can stop them from trust fund penalties and keep you clear on your side because you do need representation. Now, the fun things in life we get to do is working with truckers. We work with truckers at Trucker Tax Tools. Go to truckertaxtools.net. Hey, last week we had a special offer. This is the last week we're going to do this. So if you're looking for free bookkeeping, call us at 877-996-2477. Again, 877-996-2477. Or go to truckertaxtools.com. Put in your information. Let us help you. We give you free bookkeeping from January through August with our bookkeeping contract. So it's a great way to get 8 months of free bookkeeping right now. Don't delay. Give us a call or go to our website and hit our contact page. Get in. We'll call you back and we'll get you started. Don't miss the opportunity to get free bookkeeping for 2025. Now, if you've got problems relating to 24 or before, we can help you with that as well. We got special rates to help you. Just give us a call. Hey, most important thing out of today, if you've enjoyed this show, go to taxtalk4u.com. That was the letter U. taxtalk4u.com. And follow us on Facebook. like, share with your friends, with your family, and then be here every Monday at 10 a.m. Eastern Time on W4CY Radio. We want you here. We want your questions. We want to help you navigate the complicated road of taxes, the complicated road of bookkeeping. You do the truck driving, you follow your GPS. We do the bookkeeping, which helps you navigate the road to financial success. So do that today. Jump in at taxtalk4u.com. Be here. Have a God bless, glorious week. Enjoy life. Life is short. Make it fun. And we'll see you next week right here. W4CY Radio, taxtalk4u.com. Thank you. God bless.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalk4u.com. See you next week at W4CY.com.